Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to have a look at the NQ, in particular because I'd like to follow up on some analysis that I was doing in our live training webinar yesterday afternoon. And I particularly want to look at this because it's a great example of the difference between a forecast, in other words a forecaster, guru, newsletter writer, all that kind of stuff where people try and predict the future rather than traders that are just interested in profits and losses. So this is a great educational piece for you guys who haven't really totally understood the difference there. So let's go through this. This was a 15-minute chart of the NQ, and what I was looking at was this was just after the open yesterday, which is the 25th of November. We can see that we had a DP resistance on the chart, and if I zoom in a bit you can see that the market hit that DP resistance. You can also see that we had a nice 5-wave sequence going up here with the high right at the minimum wave 5 WPT. So what I was saying was this was a larger degree or important high. Therefore I was suggesting that the market was going to carry on down and decline. If I zoom into the 3-minute chart, this is what happened during the webinar yesterday. Here was our larger degree resistance area. The market made, I'll just zoom in a bit here, the market made an initial decline down, it then made an ABC correction. So what I was suggesting at the time was this TS3 sell here was a potential holy grail trade setup, as we like to call it, because the market was making a potential wave 2 and therefore we were looking for a potential wave 3 type of decline. It would have been nice if it had got down here, but as you can see it didn't. The market was actually would have actually stopped you out and you would have had a -1 hour loss. Remember, we use correct position sizing to vary the number of lots, contracts or shares to keep the initial risk the same and constant across all your trades. In this case, less than 2% of a sample $20,000 account. If I zoom out, you can see that the market actually rallied up. So the gurus among you will say, well, that didn't work. The market went the opposite way to you anticipated. However, now let's look at this as a trader would look at it, and this is what we do in MT Predictors because we're traders here. The market kept on going up. This high here was still below the initial high, so on a 15-minute chart as we started this off, the wave 5 high here was still intact. So let's now look at a different time frame, in this example a 5-minute. Remember, we have our scanners running, so you can follow 3 and 5-minute charts as well. Now just look at this. This is very, very interesting here because here's our same 15-minute resistance. Here's our same initial decline. However, this time, this correction up here also unfolded as an ABC, and if I look at the history triangle here, if I place the analysis on this, you can say that it also gave us a sell setup, in this case a TS3 sell. Now the reason there's a history triangle here is I just want to zoom in on this. It means that this was a double top. Because you see this TS3 sell would have had you short 11 contracts this time, again for our correct position sizing, again keeping the initial risk less than 2% of a sample $20,000 account, the same as we had before. So you'd be short at 34.35. Your stop would be at 34.36.75. But if I look at the high of this, if you go up and look at the top there, the high of this bar here was actually 36.50. So 36.50 means you would not have been stopped out of this first trade. The only reason we have these history triangles on here is because it was actually a double top. So what would have happened here? Well, you'd now have been short again because your original premise would have still been intact. In other words, this would have been the 15-minute high. Here's your initial decline, initial correction. You're then looking for a decline down. You'd still be looking for the same holy grail trade setup. That would have been a very nice trade to take as well. But as you can see, the market ran out of steam, or ran out of time I should say, basically because the market closed. So what happened here? Well, if we go back to the 15-minute chart, where's the 15-minute chart? There's the 15-minute chart. You can see a TS3 buy setup came in here at the close of this bar here. So what does that mean? Well, if I put a DP support on from that low, you can see that that actually comes in at the same area as the TS3 buy setup. So the 15-minute trend here would now have turned to up. So let's now go down to our 5-minute chart and the time frame we're actually trading on. Just bear with me for a second. So here's our support zone from our 15-minute chart. So there's two things you could have done. First and foremost, you could have decided to hold the trade because you're anticipating it to keep on going down. If you'd done that, you'd have been stopped out on the close about here, and you've made a profit of 3.4R. Now, before I carry on and look at the other scenario, I just want to clarify this and what this means for the trader rather than the forecaster. A profit of 3.4R is 3.4 times the initial risk or the losses. So in other words, the loss we took on the 3-minute chart was a minus 1R loss, plus 3.4R means a 2.4R profit overall, which means that even though the market did not unfold exactly as anticipated, you still made money. That's the important point, and that is the difference between a trader who keeps their losses small and has profits greater than their losses, rather than a forecaster that's just worrying about where the market's going to go in the future. And in reality, you don't have to know where the market's going, or you don't have to have a correct forecast to actually make money. This is a common misconception that most amateurs just totally misunderstand. Okay, let's see what you would have done in this case. As you're coming into this support zone here, because this was a 15-minute support zone and basically the market was running out of time, you were heading towards 4 o'clock here, you would have probably said, well, actually I want to just trail my stop perhaps one tick below the highs here, on the idea being that if it's going to carry on down it would, or if the support was coming in, you'd know that this was a 15-minute or larger degree support, therefore you want to take heed of it. So this would have increased this profit to nearer 4.3. Let's make it 4R for easy maths. So again, this shows you that the profits are large in relation to the losses. So a 4R profit less 1R loss on the 3-minute chart earlier, again, means a profit overall, in this case of 3R. So I thought this was a very, very good video to do because I wanted to follow up on the analysis from our live trading room, because it's always good to follow up a chart, in particular a chart that doesn't unfold as anticipated. It's all too easy to learn from charts that work absolutely perfectly and everyone's all happy about it, but the markets aren't like that in the real world. So it's important to look at these and understand what that means. So this example is a good one because the market did not really unfold as anticipated, but it did give you a second attempt at the same overall picture, or the large degree picture, or ballpark as we set out earlier, if you like to think of it that way, where even though the first sell setup didn't work, the loss was kept small, the second sell setup here later in the day did work and actually made a profit. But the important point, and this is the point that makes traders different from forecasters, is that the profit was much larger than the initial than the loss earlier. So overall, it was a profitable day. In fact, it was a very nice profitable day for the NQ and for MTPredictor users. So hopefully you all see how MTPredictor works in view of trading rather than forecasting, and how it works in allowing you to keep your initial risk or losses small and your profits large, and that is the most important point for any successful professional trader. That is why it's at the core of the MTPredictor software program.